Bull Bear Buzz Podcast for decoding markets, fueling minds.
Welcome to the deep dive. Today, we're zeroing in on gold. You know, that fascinating asset that sort of bridges investment and deep-rooted tradition.
Yeah, absolutely.
And with Akshaya Tritiya 2025 just around the corner, we thought, well, it's the perfect time to really unpack what's been happening with gold prices.
Definitely.
So if you've been watching the recent swings or maybe thinking about its role in your finances or cultural plans, this deep dive is for you.
We've gathered quite a bit of material, news articles, expert analysis to help navigate all this recent volatility.
Right.
And to understand the forces at play and, assess gold's long-term potential, especially with this auspicious occasion coming up.
Exactly. Our mission here is really to cut through the noise. We want to make sense of those sharp ups and downs, get a handle on what's actually driving them, and figure out what it could mean for gold as an investment going forward. And of course, keeping Akshaya Tritiya in mind. So let's jump right into this recent price action. It's been quite a roller coaster, hasn't it?
It certainly has. I mean, we saw a pretty remarkable surge in the first quarter of 2025. Gold prices jumped by, around 18%?
Yeah, that's huge.
And that pushed us to record highs. We're like at $3,500 per ounce internationally.
Wow.
And over 100,000 per 10 grams here. That kind of rapid increase, it naturally catches everyone's attention.
It really does. But then, almost as quickly it seemed, the price pulled back. What triggered that turnaround? Was it just people taking profits after that run-up?
Profit-taking likely played a role, sure. But that initial surge, it was heavily influenced by global uncertainty, those persistent geopolitical tensions we keep hearing about.
Right, the usual suspects.
Coupled with a clear shift towards safer assets among investors. Gold is traditionally that safe haven in turmoil. But then when there were hints that maybe some of those global trade tensions might be easing up,
okay.
we saw investors sort of cautiously move back towards riskier assets, and that led to the pullback in gold.
That makes sense. Uncertainty pushes people to safety, and any sign of easing pulls them back out. Now, more recently, like in April 2025, the volatility seemed to pick up again, especially with news around U.S. President Trump's economic policies. Can you break that down a bit?
Absolutely. President Trump's renewed tariff threats and his public criticism of the U.S. Federal Reserve Chair that injected fresh uncertainty into the markets.
Right.
Pronouncements like that, they can create anxieties about potential trade wars, about the stability of monetary policy, both of which tend to benefit gold because it's seen as, independent from government actions.
Right. It really highlights how sensitive gold can be to those geopolitical and policy shifts. And what about the very end of April? I noticed some reports suggesting a bit of a recovery.
Yes. Towards the close of April, there were indications that U.S.-China trade tensions were, again, showing signs of maybe de-escalating.
Okay.
This gave some relief to the markets, and it did contribute to a slight recovery in gold prices. But it's crucial to look at where things stand, like right now. As of April 30th, the MCX Gold June 5 contracts were actually trading lower, around 95,151 per 10 grams.
Oh.
That's quite a drop from the peak we saw, 99,358 on April 22nd. And the day before, the close was 95,592. So still seeing a lot of fluctuation.
Okay, so it's clear that, a lot of different factors are pulling gold in various directions. Let's maybe dig a bit deeper into those underlying influences. It's more than just the day-to-day headlines, right?
Precisely. While those immediate triggers are important, there's a broader set of factors constantly shaping gold prices.
Yeah.
Beyond the geopolitics and investor sentiment, U.S. Fed policy plays a huge role.
The Fed, all right.
Their decision to keep interest rates steady at 4.25, 4.5%, that reflects a cautious, data-dependent approach. And the fact they've paused reductions to their balance sheet, basically not shrinking the assets they hold, keeping liquidity up.
Okay.
And all the ongoing speculation about potential future rate cuts. That all influences gold's appeal. Lower interest rates generally make non-yielding assets like gold more attractive compared to things that pay interest.
And inflation, that's another key piece, isn't it? If people expect prices to rise, how does that impact gold?
Well, higher inflation expectations generally make gold more attractive. It's seen as a store of value, a hedge against your purchasing power eroding.
Right, the classic inflation hedge.
Exactly. But conversely, concerns about slower economic growth can also drive investors towards gold as a safe haven, even if inflation isn't the main worry.
Interesting.
And we can't ignore basic supply and demand, plus broader worries like rising global debt levels.
Yeah.
Oh, and something else, a fall in U.S. Treasury yields.
The return on government debt.
Yeah. When those yields fall, it tends to support gold prices too, because it reduces the opportunity cost of holding gold, which doesn't pay you anything just to hold it.
Got it.
Of course, as we said, any easing of those global uncertainties can naturally put downward pressure on gold as investors feel more comfortable taking risks again.
So with all these competing forces, what are the professional analysts making of it all? I saw some commentary from Motella Oswal Financial Services, MOFSL. What's their take, long term?
Yeah, MOFSL seems to maintain a positive long-term outlook on gold. Their advice is basically buy on dips.
Okay.
They're suggesting that any temporary price drops could be opportunities for long-term gains. Their long-term target price is around 1,006,000.
That's quite optimistic. What's the reasoning?
Well, the core reasoning likely stems from expectations of continued global economic and political uncertainties, plus ongoing concerns about inflation, those underlying factors we just discussed.
Right, the things that tend to support gold. What are the key price levels they're watching in the near term then? Any support or resistance points?
They've identified a support zone, a level where they think buying interest might pick up, between 90,000 and 91,000.
Okay, so a potential floor.
Kind of. And on the upside, they see resistance near that recent peak, around 99,000. That's where selling pressure might intensify.
Makes sense.
Their analyst, Manav Modi, also noted that after such a sharp rally recently, a period of, let's say, price consolidation or a slight cooling off wouldn't be surprising. It needs to catch its breath, maybe.
Okay, that gives us a good sense of the market view. Now let's shift gears a bit and talk about the cultural side, especially with Akshaya Tritiya coming up in 2025. Why is this time of year so important for gold in India?
Akshaya Tritiya. It's also known as Akatish, or Akti, and it holds immense cultural significance. It's considered one of the most auspicious days of the year.
Right, symbolizing wealth and luck.
Exactly. Eternal wealth, prosperity, good fortune. And the tradition of buying gold on this specific day is deeply ingrained. The belief is that any investments made then will bring lasting prosperity.
So it's more than just finance, it's tradition, belief.
Absolutely. It's participating in something passed down through generations. A powerful blend of cultural belief and economic activity.
Are there specific times, muhat timings, considered best for buying gold then?
Yes, there usually are. For Akshaya Tritiya 2025, which falls around April 29th and 30th, these auspicious periods for gold purchases typically start late evening on the 29th and go through the afternoon of the 30th. Plus, there are also Chugadiya timings that overlap, which are also seen as beneficial. But, it's always best to check local almanacs for the precise timings in your area.
Good tip. It's fascinating how these traditions endure. Now, looking beyond just this year, what kind of returns has gold actually delivered longer term? Say, if someone bought gold around Akshaya Tritiya 10 years ago.
Well, the returns have been quite substantial, actually. Looking at the data, over the past decade, say from Akshaya Tritiya 2015 to now, 2025 gold prices have gone up by over 68,500 per 10 grams.
Wow, over 68,500.
Yeah. Back in April 2015, the price was roughly 26,936. As of April 30th, 2025, we're looking at around 94,395.
That's a huge increase. Really highlights its potential as a long-term store of wealth.
Definitely.
And what about more recently, just in the last year or so?
In the past year alone, so from May 2024 to April 2025, prices have risen by about 21,668, climbing from around 72,727 to that 94,395 mark per 10 grams.
Still a very strong return.
Yes, though year-on-year percentage returns fluctuate, of course. Interestingly, the highest return in recent memory, a striking 45.98%, was between April 2020 and February 2021.
Right in the thick of the pandemic uncertainty.
Exactly. That period really underscored gold's role as a hedge against major global crises. People flocked to safety.
It makes perfect sense. Now, it seems this recent price surge might be changing how people in India are consuming gold, according to the World Gold Council. What's happening there?
Yeah, the WGC expects we'll likely see an increase in the share of investment demand in India's total gold consumption for 2025.
So less jewelry, more investment.
Potentially. The high prices seem to be dampening jewelry demand a bit, but at the same time, it's attracting investors looking for portfolio diversification, especially with ongoing geopolitical stuff and maybe some jitters in the stock market.
Right.
We're seeing this particularly in flows into gold ETFs.
So people might be holding off on that necklace, but buying gold exposure through funds instead. The Q1 figure seemed to back that up.
Exactly. Jewelry demand in Q1 2025 saw a big year-on-year drop 25%. Lowest Q1 since 2009, apparently.
Wow.
But investment demand, that rose 7% in the same period. So the share of investment demand in total gold demand surged to 39.5%. That's the highest in over a decade.
So the WGC thinks that jewelry buyers are just waiting for prices to stabilize.
That seems to be the suggestion, yes. Many are likely waiting on the sidelines for things to cool off a bit before buying jewelry. Remember, domestic prices hit that record high of $99,358 earlier in April.
And prices are up significantly this year already on top of last year's gain.
That's right, up about 25% so far in 2025, following a 21% rise in 2024. Big moves.
Yet, despite this shift, the WGC is still forecasting pretty strong overall demand for India this year.
They are. They've kept their forecast in the range of 700 to 800 tons for 2025. Now, that's a bit lower than the 802.8 tons in 2024, which was the highest since 2015.
Still a huge amount.
Absolutely. Right. It still represents very significant demand. Oh, and another point, scrapped gold supply, people selling old gold, actually fell quite a bit in Q1, down 32% year on year.
Interesting. People holding on.
Seems like it. Meanwhile, the Reserve Bank of India continued to add to its reserves, buying another 3 tons in Q1. Just highlights gold's strategic importance for central banks, too.
So whether you're buying for investment, tradition, maybe both, what are the main ways people can actually get exposure to gold these days? It's not just bars and coins anymore, is it?
Not at all. While physical gold, bars and coins, is still very popular, there are several other accessible ways. You've got gold ETFs, exchange-traded funds.
Right, traded like stocks.
Exactly. They track the gold price, traded on exchanges, saves you the hassle of physical storage. Then there are exchange-traded derivatives like futures and options for more sophisticated traders.
Okay.
And of course, digital gold platforms have become really popular. You can buy and sell even tiny amounts of gold online very easily.
Lots of options. And for those buying physical jewelry, what extra costs do they need to factor in beyond the gold price itself?
Good point. When you buy jewelry, you'll always have making charges from the jeweler. These vary a lot based on design complexity.
Yeah.
And then there's GST, the goods and services tax. Currently, it's 3% on gold jewelry. That's split 1.5% central GST, 1.5% state GST.
So on, say, 1 lakh worth of gold jewelry.
You pay an extra $3,000 in GST on top of the gold price and making charges. Always important to factor that in.
Definitely adds up. Now, with Akshaya Tritiya being such a big deal for gold buying, are jewelers rolling out the usual special offers and discounts?
Oh yes, it's very common. Lots of promotions around Akshaya Tritiya to encourage sales. This year is no different.
Like what?
Well, for example, Anjali Jewelers has discounts on making charges. MP Jewelers is offering €300 per gram off gold jewelry, plus 10% off making charges. Tithi Chandra Jewelers has $200 per gram off gold, 15% off making charges, and even 10% off diamonds. Tanishq is offering up to 20% off making charges. Senko Gold has a flat $350 discount on the gold rate, plus up to 30% off making charges.
So quite a range of deals.
Yeah, and given the strong consumer sentiment towards gold despite the price, many in the industry are expecting, very good sales this Akshaya Tritiya.
Sounds like buyers might find some good deals if they shop around. And it's not just the traditional jewelers, right? I saw something about Geo Financial Services offers, too.
That's right. They've launched a Geo Gold 24K Days campaign running April 29th to May 5th. It's for digital gold purchases on their Geo Finance and MyGeo apps.
Digital gold offers. Interesting. What's the deal?
They're giving 1% free gold on purchases between $1,000 and $9,999 using the code GEOGOLD1. And 2% free gold on purchases of $10,000 and above with code GEOGOLD at 100.
Okay.
It's valid for up to 10 transactions per user, capped at a bonus of $21,000 worth of gold. And the bonus gold usually gets credited within 72 hours for lump sum buys.
Okay, good to know about the digital options, too. So let's try and summarize our deep dive today. It's clear gold has seen, significant volatility lately,
Definitely.
driven by this complex mix of global economic and political factors. But despite the swings, analysts like those at Motilal Oswal seem to have a positive long-term view, suggesting dips could be buying opportunities.
The buy on dips strategy.
And Akshaya Tritiya remains this hugely important cultural driver for gold buying in India, even with these high prices. Plus, we're seeing this potential shift maybe towards more investment demand versus immediate jewelry buying.
That's an excellent overview. And we also touched on the different ways you can invest: physical, ETFs, digital derivatives, and those extra costs like making charges and GST for jewelry. And finally, Those Akshaya Tritiya offers from various jewelers and even digital platforms like GeoFinance, which might be worth considering if you're planning a purchase. Now, just a crucial point here. The information provided today is purely for educational purposes. It's not financial advice. We are not SEBI-registered advisors. Investing in assets like gold or stocks carries risks, including the potential loss of your money. Always consult a qualified, SEBI-registered advisor before making any investment decisions.
Very important.
We aren't liable for any losses based on this information. And for more unbiased market updates, please do subscribe to the Bull Bear Buzz podcast.
Great. And on that note, maybe a final thought for you, the listener. Given this ongoing dance between global uncertainties and gold's enduring cultural weight, how might its role in your financial planning or maybe your personal traditions? How might that evolve in the years ahead? Something to think about.